Welcome to the deep dive. Let's get straight to it today.
Sounds good.
The headlines are pretty hard to miss right now. President Trump's escalating trade war, it's really sent waves through the market.
Yeah, definitely seeing the impact.
As of today, April 23rd, 2025, the S&P 500 is down, over 11% year-to-date?
That's right. And the Nasdaq 100, the tech index, has felt it even more, down over 16%.
Oof. Now, some people see that red and think, alert, right?
Yeah.
But, for investors looking strategically, times like these can actually highlight some compelling opportunities.
Exactly. Market-wide dips often drag down even really solid companies, put them on sale, essentially.
So that's our focus today. We're going deep on two specific tech giants,
Yeah.
Nvidia and Meta Platforms.
Yep. The Motley Fool, their analyst just put out a piece this morning, actually. They're calling them unstoppable giants and suggesting they might be really interesting buys right now because of this market turbulence.
Okay, solid source. Their analysis just came out.
Just this morning. So, yeah, definitely timely. It deserves a close look.
All right, let's jump into Nvidia first then. Their stock certainly felt the pain, hasn't it? Down 34% from its high.
It really has a significant drop.
So what's driving that? What's the core reason?
Well, according to the analysis, it's mainly two things hitting them. First, these escalating U.S.-China trade tensions we mentioned.
Right.
And second, the new export restrictions tied to that. Then, on top of it all, Nvidia just announced this expected write-off, about $5.5 billion.
Wow, $5.5 billion?
Yeah, related to their H20 chip, the one specifically for China. That kind of news, understandably, makes investors nervous in the short term.
$5.5 billion is definitely nothing to sneeze at. But the argument in the piece is that the long-term picture for Nvidia is still strong.
That's the core idea, yes.
So what are those underlying strengths? They talk about that economic moat, right?
Huh.
What is that for Nvidia?
Right, the moat. It's what protects them from competitors. For Nvidia, it's built on, well, first, their market-leading GPUs, the graphics processing units. They're the standard for heavy-duty computing tasks like AI.
Okay, the hardware.
But the second part, and maybe even more critical according to the Fool, is their software platform, CUDA, Compute Unified Device Architecture.
CUDA. We hear that term a lot. For someone less techie, why is that such a big deal? Why is it a moat?
Okay, so think about AI developers, research labs, startups. They've spent years building their systems, their entire workflows, specifically on CUDA.
Ah, okay.
To switch to a different platform, maybe from a competitor like AMD, they'd have to retrain staff, rewrite huge amounts of code. It's incredibly expensive and time-consuming.
So it creates lock-in, high switching costs.
Exactly, a powerful lock-in effect. Even if someone else makes a slightly better chip, overcoming that inertia, that existing CUDA ecosystem is a massive hurdle.
Got it. So, okay, back to the China situation. Some analysts are apparently predicting that Nvidia's China revenue could, drop to near zero.
Yeah, that's definitely a concern being discussed. The export restrictions are serious.
But the counter-argument is global demand will pick up the slack.
That's the crux of the Fool's argument. They emphasize that global investment in AI is just huge and still accelerating. Businesses everywhere are pouring money into it.
Right, AI isn't going away.
Not at all. And that insatiable demand for high-performance computing, mostly GPUs, is expected to keep growing right through 2025 and beyond. The thinking is this global trend could potentially offset, maybe more than offset, those China losses.
Okay. And Nvidia isn't just a GPU company anymore, is it? The analysis points to diversification.
Exactly right. They've been very strategic about expanding. They're now seriously into networking hardware, enterprise software, various services.
Broadening their base?
Yep. It significantly expands their total addressable market, makes them less reliant on just one thing, like high-end GPUs or one region.
So for you, the listener, looking at Nvidia right now, what's the key takeaway from this analysis?
I think the main point the article makes is this. Yes, there's geopolitical uncertainty. Yes, there's this China write-off. But the AI revolution, it's still really just getting started.
Early innings.
Very early. And Nvidia, with its market leadership, that CUDA moat, and its broader portfolio, seems incredibly well-positioned to benefit long-term. The current valuation trading around, 21.8 times forward earnings?
Yeah, that's what the article cited. Much lower than recent peaks.
Right. So the argument is that price might be underestimating their long-term potential in this, rapidly evolving AI world.
Okay, compelling case for Nvidia despite the headwinds. Let's pivot now. Let's take that deep dive into Meta Platforms. Facebook's parent company.
Okay.
Their stock has also had a rough ride, down about 33% from its 52-week high, tracking that broader market sell-off.
Yep, caught in the same downdraft.
So why does the analysis see this as a potentially attractive entry point?
Well, a big factor mentioned is valuation again. Meta is now trading at just 19 times forward earnings estimates.
Okay.
Compare that to a year ago when it was trading at a multiple of 24. So significantly cheaper on that metric. That lower price, combined with their, frankly, enormous scale, makes them look interesting to these analysts.
And when you say scale, their user base is just mind-boggling, isn't it?
It really is. We're talking nearly 4 billion monthly active users across Facebook, Instagram, WhatsApp, Messenger.
4 billion. Almost half the planet.
Precisely. That kind of reach is just unrivaled in social media, and it gives them this huge built-in advantage, especially as digital advertising continues to grow.
But it's not just about the social media apps anymore, is it? The Motley Fool piece highlights their moves in AI.
Absolutely. That's a key part of the story now. They just unveiled Llama 4.
Llama 4, their new AI model.
Their next-gen large language model, yeah. And what's really notable is it's multimodal. It can understand and generate content across text, images, and video.
Well, okay. That puts them right up there with the big players, doesn't it?
Yeah.
Anthropic, Google, OpenAI.
Exactly. The analysis suggests Llama 4 puts Meta on par with the latest models from those competitors. They're innovating at the very top tier of AI development.
That's impressive. But the article hinted their real edge in AI might be something else, not just the tech itself.
That's a crucial point they make. Look, other companies might build great AI models too, but Meta has something unique. That massive user base.
4 billion users.
Yes. It's an unparalleled built-in distribution network. They can roll out new AI features and technologies at scale immediately across their platforms.
Ah, so they can deploy AI faster and to more people than maybe anyone else?
Potentially, yes. Think about integrating AI features seamlessly into Instagram Reels or WhatsApp chats or Facebook feeds. That could massively boost user engagement and also make their advertising even more effective, more targeted.
Right. Better ads mean more revenue.
Yeah.
Okay, so thinking about the current economy, the trade war fears, could that hurt ad spending overall?
It definitely could. Economic slowdowns often lead businesses to pull back on advertising. That's a risk.
But is there a potential silver lining for Meta specifically?
The analysis suggests there might be. All the uncertainty around TikTok's future in the U.S.
Right. The potential ban or forced sale.
Exactly. If advertisers get nervous about TikTok, they might shift budgets towards more stable, large-scale platforms. Meta could be a major beneficiary there. Plus, Meta keeps focusing on improving engagement with things like stories and reels and constantly tweaking their ad algorithms. That could help them weather an economic storm, too.
Makes sense. Of course, no company is without risks. What are the potential downsides highlighted for Meta?
Well, the big one is regulation. There's that ongoing U.S. monopoly case, which is a significant overhang.
Yeah, it's been around a while.
And then there's the spending on Reality Labs, their metaverse division. They are investing huge amounts of money there, billions and billions, and it hasn't really generated significant returns yet. That's a long-term bet that carries risk.
So regulation and the metaverse gamble. But the assessment seems to be these risks are maybe already priced in, given the lower stock valuation.
That seems to be the implication from the Fool's analysis, yeah.
Yeah.
They suggest that for investors who can tolerate those risks, Meta offers this interesting mix. Strong current profits from digital ads, plus this really significant growth potential from AI thanks to their unique distribution power.
Okay. So, wrapping up our deep dive today, we've looked at two tech powerhouses, both caught in this market downturn.
Right.
You've got Nvidia, the AI hardware kingpin, potentially available at a discount, according to the source, despite those China headwinds.
Mm-hmm.
And then Meta Platforms, the social media giant with that incredible reach, now making serious plays in cutting-edge AI, which could unlock a lot of future value.
And it's crucial, as the article really stressed, to remember the context here. This market sell-off, largely driven by fears around the trade war, that's what's potentially creating these buying opportunities in what the source sees as fundamentally strong companies.
So a final thought, perhaps, for you, the listener, as you digest all this. Think about those long-term trends. AI, digital engagement, where are they headed? And could this current market volatility, this turbulence, actually be a unique window to invest in these kinds of foundational tech companies, even with the near-term choppiness?
It's definitely something to consider seriously as you navigate what's happening out there. Food for thought.